ahead and pop us over to the next slide, Miss Anna.
Yes, ma'am. Can you see it? Today's agenda.
Yes.
Mhm.
Yeah, and then just a quick disclaimer that today's webinar is just for educational purposes only. Any rates or disclosures should be covered with a credit union representative at the time of service. So without further ado, I'd like to introduce you to our keynote speaker, Anna. She's worked at the credit union for 10 years with the financial wellness team for 4. Anna is a certified counselor and says her favorite thing about working for the credit union and the financial wellness team is giving members proven solutions as they struggle through financial difficulties and challenges. Anna, thanks for being here and helping people achieve their financial wellness goals. I won't go
Thank
far,
you.
but the floor is now yours.
Thank you, Sutton. Hello, everyone, and thank you for joining us today. My name is Anna. As Sutton said, I have been with the credit union for 10 years, and before I was working in our financial wellness department, educating members on their finances and everything that encompasses, I was with our recovery department, our collections department, and so I was with them for almost 6 years. And I remember just talking to people and having to be on phone calls back to back and helping them come up with payment plans for loans that were past due or just giving them quick advice on credit and their finances. And so I always really wish that I could sit and talk to them for longer and help them more, give them more recommendations to get them to where they need it to be. And so thank goodness that I am now with a department that I get to do that. So I get to talk to you all about improving your credit score, all kinds of good things, and even sitting with members one-on-one for as long as you want to kind of get you to where you need to be to reach your financial goals. And so what we'll be talking about today is 5 steps to a better credit report. So on today's agenda, what do we have? How are credit scores calculated? Who looks at your credit report? What is considered a good credit score? Your payment history, the balance you carry, emergency savings, checking your credit report, and then being patient and consistent. Okay. Now, why do I think that credit scores are so important? That is actually one of my favorite things to talk about with members and anybody really. I believe that most of us are not super rich. We don't have thousands and thousands of dollars just sitting in our bank account in case our car breaks down. We don't have just $30,000, $20,000 to go buy ourselves a new car. If we need to buy a house, we don't have hundreds and thousands of dollars to, just get up and do that. And so I've always believed that our safety net is our credit score. And that's why it's so important for all of us to have a good credit score in case of emergencies. And so we'll talk about how we're going to get you there. Okay, let's go on to the next slide. So first of all, how are credit scores calculated? Okay, as you can see here, 35% of what has the most weight on your credit score is going to be your payment history. Okay, so the most important thing you can do to maintain a good credit score is to just make all your payments on time. Okay, make all your payments on time. Preferably having a loan or a credit card with a history of 6 months or more is what's going to show a good payment history. Um, some people do payday loans for 2, 3 months and pay them on time, which is great also, but that's not really going to build history. Okay. The second is 30%. Okay, so 30%, that's the second factor, and that's the amount of debt that you carry. Okay, this doesn't refer to how many credit cards you carry. You can have 2 credit cards or you can have 100 credit cards. And that doesn't mean you're going to have an awesome or a horrible score. Okay, so what that 30% is referring to is that regardless how many credit cards you have, your utilization has to stay under 30%. Okay, and in the next slides, we're going to talk about that a little bit more. So that's the second biggest factor. Length of credit history. Okay, so that accounts for 15%. The longer you have the accounts open, the better your credit score. Moving on to 10%, new credit. Okay, so when you open a new credit card, you may notice a small drop in your credit score. If you open several credit cards at once, it's going to be an even bigger drop on your credit score. So the longer the accounts are open, the better your score is going to look. Try not to open too many accounts all at once. And then finally, that last 10% accounts for the types of credit used. So a mix of credit. It's always good to show a good mix like loans, vehicle loans, mortgage, personal loans, credit cards, and whatnot. We see often that the people who tend to have the higher credit scores, like 790, 800 credit scores, are people that not only have had their credit accounts open for years and years, showing that long payment history, but also having a good mix. Almost everybody has a mortgage on their credit report. Okay, so that accounts for 10%. Let's go on to our next slide here. So who's looking at your credit score? Okay, lenders, right? That's the first one that comes to mind. That's the first one that comes to mind whenever we think of credit scoring. That's normally what we're mostly worried about. Just, are they going to approve this for me? Are they going to approve a car loan for me or an emergency loan, credit cards? Okay. So lenders use credit to determine whether or not you are likely to pay back a loan. Leasing agents. So leasing companies will do a credit check before allowing you to rent an apartment. Utility providers. Okay, so they'll also check your credit score before signing any kind of contract with you. Employers. I have had some jobs where they do check your credit. And so that pretty much, they use the credit to determine your character. Studies show that a person with bad credit is more likely to slack on a job. So sadly, we actually are judged on our credit score. Okay, that's also another reason why it's so important to just keep a good credit score. And if you don't, we're going to get you there. Insurance agents. So a lot of insurance agents also look at your credit score to determine your claim risk. Okay. So studies also show that people with bad credit are more likely to get tickets or get into car accidents. And then lastly, you want to be looking at your credit score at least once a year. Okay, to just make sure that the accounts that are being reported on there are accurate. If there's anything that you don't agree with, you want to file a claim on, okay? And that is something that we find very often when sitting with our members and pulling their credit report and just reviewing with them. A lot of the times people don't know what something is, or something reported twice and is really affecting their credit score. And so that's something that you want to immediately file a claim on so that the credit bureaus can remove it from your credit report. Okay. So moving on here, where is my mouse? So what is considered a good credit score? Let's talk about that. Well, first of all, I see here that we have the FICO score range, okay? And before I start talking about these credit score numbers, I wanted to address something that a lot of people always have a question on. What is the difference between FICO score and Vantage score? Okay. And so the way that I describe it is that they're two different companies that have different calculations on how they determine your credit score, right? And so with Vantage, they can calculate a credit score based on different things, and they can even calculate a credit score for somebody who has no credit, who maybe just started a month ago building credit. While FICO, they normally require at least 6 months of an account being open for them to even calculate anything. Um, what is most commonly used by lenders is the FICO score. Okay. Vantage score is something that is more commonly used on apps, like when you use Credit Karma, or even when you use the credit score Savvy Money through our American Airlines Credit Union app. Okay. So I always recommend that you tend to look more into your FICO score versus your Vantage score when it comes to you wanting to apply for loans. Okay. And so with FICO, what's considered a poor credit score is anything from 300 to 579. Okay. Fair credit score is 580 to 669. Good, 670 to 739. Very good is 740 to 799. And then exceptional is anything from 800 to 850, which we don't see very often. Obviously, another reason that you want to try and get to a really good credit score these days is interest rates, right? Interest rates are kind of ridiculous everywhere you go. They're pretty high right now, and so you want to at least aim to have a better credit score so that you can save yourself some money whenever you do inquire for a loan. And here I am showing here this graph, okay? So the average credit score in the US remains 715, and this is as of September 2024. So something that I wanted to address here is that if you see in 2019, that's when COVID happened, okay? You see the credit scores on average here in the US was around 701. And then you would think that because of COVID, maybe credit scores dropped because people, what happened? People were unemployed, people were using credit cards, were getting loans out. But that's actually not what happened. Credit scores didn't go down. Credit scores starting to increase more. I think what happened, and by talking to a lot of our members, is that they realized during COVID, during that struggle with finances, how important it is to have a good credit score. Once again, like I mentioned earlier, we don't have thousands of dollars. Most of us don't have thousands and thousands of dollars just in our bank account. And so when things like this happen, emergencies, we have to get a loan, right? That's our safety net, our credit score. And so I'm thinking people realized that during COVID and worked hard on improving their credit score. So 715 is really good. So what are we going to do to get our credit score looking great? You can start now, or you can make that a goal for 2026. So pay on time every time, okay? Your payment history, like we talked about, is the largest contributing factor that makes up your credit score. Even one missed payment makes a huge impact on your credit score. And one late payment, after 30 days, at 30 days, it reports on your credit score. So say you have a loan and your past due may be 15 days. It's not going to hit your credit score at 15 days. You probably are going to have late fees with whatever lender you're with, but at 30 days is normally when it reports to your credit. Once it reports to your credit, it is very hard to get that removed from your credit report. Okay, that is not something that you can normally call that lender and negotiate to have removed or anything like that. And unfortunately, it stays on your credit report for 7 years. That one time that was paid late 30 days, it will stay on your credit report for 7 years. Okay. So just something that you can do to prevent this is setting up reminders or using automatic payments to help you just stay consistent with your payments and not have to stress about any of that. Very important right there. Next, the balance you carry. So yes, it is very normal to, if you open a credit card, you're obviously going to use it, right? That's normal. Okay. What's not normal is maxing out your credit card. Okay. So a good rule of thumb when it comes to credit card, and that second factor that affects or that makes up your credit score, like we talked about earlier, is debt. And that 30%. So you want to keep that 30% in mind. What does that mean? Whatever available credit you have on your credit card, you want to stay under 30% of it. So as an example, let's say that you have a credit card and your credit card has a credit limit of 1,500, right? So multiply 1,500 by 0.30, that comes out to $450. That means that you never want to spend over $450, okay? So you don't want that balance on your credit score to go over 450. If it does, and you let it roll over onto the next month, your credit score is going to drop drastically. Okay. If something happens and you have to use more than 450, that's fine, but make sure that you're paying it at the end of the month. Okay. Before your bill comes around, make sure that you bring that down so that it doesn't transfer over onto the next month. When I've talked to members before, I get so many people that tell me, well, Anna, I heard from so and so that I have to let my balance roll over onto the next month to show that I'm using the credit card and build my credit score. That is a myth, okay? So you do not have to accumulate a balance and have it roll on to the next month for you to build your credit score. That is not true at all. Okay. And it's also a myth that you have to max out your credit card to increase your credit score. No, not at all. So for any credit card that you might have, whether it's 2, 3 credit cards or 100, like we mentioned earlier, for each one, you want that balance to stay under 30% of the available credit limit. Okay. Moving on to our next slide, emergency savings. So this is super important. Um, are you surprised to see savings on the list? So having even a small emergency savings can keep you from leaning on credit cards when unexpected expenses pop up. This is something that I talk to, once again, my members all the time. If they have a credit card that's maxed out, 9 times out of 10, they're telling me that they went unemployed and they had to use a credit card to pay for their rent, to pay for their car payment, to pay for groceries. And so that's why it's so, so important to start an emergency savings, okay? So that when unfortunate situations happen, you don't go relying on your credit card and end up using more than that 30% that we just talked about, okay? And so the good rule of thumb is to save at least 3 to 6 months worth of living expenses. So if anything happened, you have that money sitting in savings, you can pay your bills, and in 3 to 6 months, on average, people normally find a job by then and can kind of, recover from that. Now, 3 to 6 months sounds like a lot, but don't panic. You can always start off with $1,000. Okay. Just if you have debt right now and you're trying to pay off debt and you're trying to improve your credit score at the same time, it's never a bad idea to do both at the same time, okay? Build your emergency savings, put in $50 a month, $100 a month, whatever you can, while paying down debt, while working on your credit score, okay? So that before you know it, you have your $1,000 in the emergency savings and you're still working on your credit score. Okay, so something that I pulled up on here is how much each generation currently has in savings. Okay, and this is as of 2024. So what you can see is that Generation Z has is the generation that has the least amount of money, under $1,000. Okay. Um, we want, like I said, we want to get you over here on the 1,000 to $5,000 in savings account. Okay. So based on whatever your generation is, those are the percentages. Once again, the goal is to be above $1,000. So you can kind of see where you're at. So let's talk about checking your credit report. So mistakes happen. Reviewing your credit score regularly helps you catch errors and spot signs of fraud. You can request your credit report free on annualcreditreport.com. That is a legitimate website that I've used, my members use. Okay, so on this website, you can check your credit report for all three credit agencies, Equifax, Experian, and TransUnion. It does not show you your credit score. Okay, if you want just your score, you can use our app, which I'll show you in a minute on a different slide, or you can use things like Credit Karma or go directly to Equifax, Experian, and TransUnion to check it. But Annual Credit Report does a really good job at giving you your credit report so you can make sure that the accounts on there are accurate, that there's nothing fishy going on. Okay. Let me see, what else do we have here? And then lastly, be patient and consistent. Okay. So don't be discouraged if you don't see any changes right away. Typically, you will see a change in your credit score 30 to 45 days after you've made a loan payment. If you're paying extra on a loan, that's not going to reflect immediately. It's going to take 30 to 45 days for you to see that change. So you always want to time that in and keep that in mind. I have members that come to me because they want to prepare for a mortgage and they tell me, I want to apply for a mortgage next month, but we found something on their credit report that they need to make a larger payment on. Well, just because you pay that, that week that we talked about it, doesn't mean that you're going to be good to go in exactly 30 days. You might want to wait a little bit longer so that it can reflect that way whenever the mortgage lenders pull it, it's already been corrected. Okay, so always keep that in mind. Focus on steady progress. Every one payment, every dollar that you save brings you closer to your goals. So improving your credit score isn't about being perfect. It's about being intentional and consistent with your habits, knowing how to differentiate from needs and wants whenever you're out shopping, whenever something comes about. By combining thoughtful credit use with regular savings, you're setting yourself up for a stronger financial foundation, one step at a time. So here is what American Airlines Credit Union, what we use to check your credit score. Okay, so it's completely free for everyone. It is powered by Savvy Money. And if you have your username and password to our online banking app or our mobile app, you can log in. Under menu, you will find financial wellness. When you click financial wellness, you will see the credit score. Um, tab, and that's where you can put in the last four of your social security number and you'll get all of this great information here. Okay. And Sarah, I think this is all you now.
Yes, thank you, Anna. So in order to take advantage of our financial wellness services that Anna mentioned today, you need to become a member if you're not so already. So for those who'd like to start their member journey, you can easily do so by scanning that QR code and using the promo code BD4412 at the end of your application. And that code will take care of the initial new member deposit. It's usually only $6, but from now until the end of the year, it's $25. So you have nothing to lose. Plus, once you're a member, you're always a member. That means if you decide to take another job opportunity outside the air transportation industry, you can still retain those credit union benefits. And once you're a member, you get to share the benefits of a member with your family members, permanent household members, or coworkers who are eligible to join. So get those referrals. You get $25 up to $250 for those, and a few current quarterly offers we have. Anna, if you want to move it to the next slide for me.
Yes, ma'am.
Thank you. So a few of our Q4 offers that we have going on from now until the end of the year is a few different contests. So whenever you use your American Airlines Federal Credit Union debit or credit card, you have a chance to win money just in time for the holiday season. So five cardhold members will be winning $2,500. So each swipe is one entry for that. So definitely use your credit cards for this holiday season when you're out shopping. Another contest we have is whenever you review your beneficiary and contact information online, you can be entered for a chance to win $1,000. And when you open a new checking account, you can earn up to $100 whenever you set up direct deposits. So definitely go check out those offers on our website for more info. It'll be aacreditunion.org/offers. And then we can move to the next slide. I think there's one question in the queue that I have for you, Anna. But
Okay,
if our
perfect.
attendees have any questions, now is the time to drop them in the audience Q&A in the Slido, and we can ask them before we wrap up. Let me see here. Should you close old credit cards you're not using, or does that hurt your credit score?
Yes, so closing credit cards will hurt your credit score. They will typically see a credit score drop anywhere from 40 to 60 points whenever a credit card is closed. So it really depends. If it's a credit card that's going to be charging you an annual fee, we obviously don't want that if you're not using it. Um, but if you don't have anything coming up in the future that you plan to apply for, like a car loan or a mortgage, something big like that, then I would say it's fine to go ahead and close that credit card, but don't go closing more than one at a time at the same time, because that's going to dip your credit score big time. Just close one, wait a few months. If in a few months you still don't see yourself applying for, any kind of loan or anything like that, then go ahead and close one more. So yes, it does hurt your credit score, but if you need to close it, fine. Just make sure that there's nothing coming up that you might need your credit score to be in good standing.
All right, thank you for that. Another one that I have
Mhm.
is, sorry, I lost it. Oh, does paying off your credit cards every month, does that benefit your score or does it hurt it?
No, it definitely helps your credit score when you pay it off every single month. So that's going to look good. Once again, what these lenders want to see, what the credit bureaus want to see, is that this member is being so responsible. They have all this available credit and they're barely using it, or they're not even using it at all, or they're using it and paying it off. So that's what's going to look really good.
Perfect, thank you for that one. I think I saw one more in the queue here.
Mhm.
How do you schedule a one-on-one appointment if needed? I'm guessing they're talking about financial wellness.
Correct. Yes. So let me go ahead. I will. Let me see if I can share. You can call our 1-800 number with American Airlines Credit Union and do extension 4059. Okay, 4059 to schedule an appointment. We have our wonderful helpers, Xiomara and Nora, scheduling appointments one-on-one. They'll have you sign some paperwork via email, send it back to us, and you'll be on our schedule for our one-on-one, completely free as well.
Perfect, thank you for that. I don't have any other questions on my side. Sutton, any questions you see?
No, nothing on my side. You answered all the ones I had.
Perfect. Alrighty, well, I will wrap us up if there's nothing else to cover.
Sounds good.
Alrighty, well, thank you everyone for joining us
Thank
today.
you.
If you have something a little bit more personally you'd like to discuss with the financial wellness team, we'd love to connect you guys. Just let us know on the survey that you should be receiving in about 30 minutes that you'd like a financial wellness or a credit union representative to reach out, and they will follow up early next week. Be sure to visit our event schedule on our website for details on the upcoming webinars and our upcoming events. Next month, we are celebrating our last membership campaign week for the year. So don't miss out on that one. And stay connected with us on social media. Follow us on Instagram, X, and be sure to like and subscribe to our Facebook and YouTube channels. Next week, this will be uploaded to our YouTube channel, so you can watch that if you missed anything or watch any previously recorded webinars just like this one. But on behalf of Anna, Sutton, myself, and the entire credit union team, we truly appreciate you guys tuning in with us. Have a wonderful rest of the week and weekend, and please stay safe, healthy, and happy out there. Panel, y'all, any last words before we close out?
Thank you so much for joining.
Thank you guys. We'll see you on the next one.